indeed an honor and a privilege for us to have with us this evening Nynas Global President and CEO, Mr. Gert Wenroth. To formally welcome Mr. Wenroth, I'd like to first invite Nynas Regional Director for Asia, Middle East and Africa, Pascal Veroy.
Thank you, Arjun. On behalf of Nynas, on behalf of the Asian, Middle East, African region, I would like to thank you to take the time to come here. I also like to thank our president to take the time and come here to India. I think it clearly shows that India is important for Nynas. With Nynas, we are very confident in our business here in India, and we thank our customers for all the trust and the revenues that you have created with us. On this, I would like to invite our CEO and President Gert Wenroth. Gert is with Nynas almost 2.5 years, is a dinosaur in the oil industry, has been working for more than 20 years with Shell, quite a known company, and also with a specialist oil company, Hansen and Rosenthal. So please welcome Gert Wenroth to the stage. Thank you.
Ladies and gentlemen, welcome. It's really a great pleasure and a great honor to be here, visiting your country. It's been a very interesting day so far, and I'm really looking forward to some interesting and hopefully challenging discussions to provide some more insight into where we believe and you all believe the industry and the Indian economy is going. Nynas, very old Swedish, very traditional company, and we are all over the world. We are not making anything for end consumers, so if you ask people in the street, apart from Sweden where some decades ago we had petrol stations, no one will know us. But business knows us. Because we are a global leader in the field that we are playing. And that's why India is so important for us. And that's why I'm really glad to have this opportunity to be here, to really see what you think. I wish you an interesting discussion, and hopefully afterwards a very nice evening. Thank you very much.
Ladies and gentlemen, we have something interesting for all of you all, and hopefully you will enjoy watching and participating in what's going to unfold in front of you. We are very proud and happy that ET Now is associated with us for this event to cover our CEO's visit to India. So I will now leave you in good and trusted hands of Manisha Gupta from ET Now.
Gert, this is the first time you're coming to India and Mumbai. So since you are here, and as you talked about India and you are here, so aptly the first question really should be that what are your plans going ahead for India now?
India is one of the largest markets. If you just look at it individually, apart from the US and China, it is the third biggest market for us as a company. And that's why it's absolutely clear we have to be here. And there's no choice. I think secondly, our ambition is to grow. Given the fact that this is a big growth market and our ambition to grow, it matches perfectly well. I think it's 9 years now that we are here with an own organization, and I think we've made huge progress, but we believe there's much more potential, and that's why we're trying to sort of accelerate that growth and even penetrate more than before.
What kind of growth are you seeing in India, and apart from India as well currently, and what are your future growth plans when it comes to other countries?
As I said, the three large countries in the world, US, China, and India, all three we are focusing on. US certainly is a bit more difficult because they are large American local competitors. As we are coming from product from outside the US, we really there concentrate more on some specialty areas, and we're not covering the whole spectrum. I think here in India, it's a little bit the same. We see ourselves as a specialist company, so we don't want to compete with everyone and everything, we really focus on those applications where we believe that our products bring a value added to our customer. And given the size of the country and the economic development, there is huge potential.
You know, when we talk about China and India, there always is this comparison. So while China has perhaps seen a lot of growth in the last 1 decade, people are betting on India right now, and are you too?
Very difficult question, because there's so much politics there influencing the development in the individual countries. But currently, I would say you're probably right. In China, we're seeing some more severe slowdown than in other parts of Asia. But even though, I mean, a lot of people ask me that question, but I think that both countries are so large and offer so much potential that if the growth is 10 or 8 or 6%, there's still so much out there to go after.
How about refineries? Do you have any in Asia? Are you opening one? If not in India, then any other part here?
We're focusing on 2 product areas. One are these naphthenic specialty oils. The other one is bitumen. Bitumen is a product that does not travel very well over large distances at a reasonable price, so that we concentrate on Europe only. And for the naphthenic products, we have currently 2 refineries. Both are in Europe. And naphthenic oils, they travel at reasonable cost. We just made a large acquisition in Europe. So I think first we have to digest that and get it sort of up to speed, really get the volume through that unit, and then to think about the next steps. But I'm sure that at some stage we need some production facility also in Asia.
So after this acquisition you just talked about Harburg, what is the production capacity, size versus other refineries that you hold right?
Our refinery size is always a difficult subject because it depends what you manufacture. But with the Harburg acquisition, we are, well, not quite doubling, but we're getting close to probably 40%. It's really a significant increase of our global manufacturing capacity through this acquisition.
You know, there have been so many reports that other refineries, other businesses perhaps are cutting their spending or capital outflows as well. So at that kind of a time, when you make an acquisition, how do you position yourself?
The change in the refinery landscape in our part of the business is more a consequence of what has happened in the automotive lubricants industry. If today you want to manufacture a modern engine oil or a modern gear oil that goes into a modern car, the traditional type of base oils that you used, they are no longer good enough quality-wise. That's why the industry has moved to higher quality oils, and that's why these refineries that produce these lower quality oils, they struggle. But at the same time, they produce oils that compete with ours. So that's why actually this trend of these simpler base oil refineries closing is actually supporting our business model.
Sure is. You know, while you talked about the low price products available, there are some substitutes perhaps coming in as well, and there are some commodities or some products which perhaps are being talked that could replace naphthenics going ahead.
Well, I think we've never said that we are alone on this planet and there is no alternative. For sure, there are products that compete with our products. That's why we are trying to concentrate on those applications where naphthenics have, in our view, a competitive advantage. On the other applications, that's not our core focus.
What are the opportunities and the challenges as well that Nynas at this point in time is facing?
Well, I think the opportunities are very obvious because the market out there is huge. There are a number of applications where we believe that our products really add value. So that's the market we're going after. I think there are a number of countries over and above India and China that everyone talks about that are developing very fast. We have entered into Vietnam. We're thinking about going into Myanmar. If you look at South America, we're just recruiting people in Colombia. So there are a lot of economies that are really growing and perhaps that are not so much in focus. So I think there is a lot of opportunity out there. The challenge is that is the volatile oil market, that is how these prices sort of move through the system, how you survive perhaps even in a prolonged period with slightly lower margins. So these are challenges that are there, but they are not new. They have been there before, and you just need to be flexible and need to adjust.
Volatility is the only part that you will need to live with because it's going to be here for a longer time this time.
Well, no one knows, but yes, I think the industry is preparing itself for prices at a reasonable low level for quite some time. Yes.
Lower, longer time. Thank you, Gert, so much.
Thank you very much. It was a pleasure.
Ladies and gentlemen, the next part of the program is we're going to have a panel discussion moderated by Manisha. Manisha, all yours.
Thank you, Arjun. Saugata, since you are the first one on my left sitting there, I want to start with you. Let's start with the crude oil prices, the kind of decline that we saw in 2015, continuing into 2014, 15. Do you see it spilling into 2016 as well?
Probably. So are we seeing crude prices come down? I think it's been a boon for India, boon for the Philippines, a few select countries. It's probably going to last for some time. So the last set of EIA, IEA, these words are interchangeable. I think they have predicted that global demand is going to fall short of global supply. I think what has been remarkable in the last 8 months has been the way that the OPEC countries led by Saudi Arabia have not begun to cut production, cut output. I mean, they're actually beginning to retain market share. So that speaks a lot for the state of the petroleum industry. But having said that, I mean, I was watching some of Nynas's groups. I mean, what a boon for Mumbai. I mean, the tires on your motorbikes meets the asphalt of the Mumbai roads and will cut down on motorbike fatalities by more than 50%, I can assure you. So, I mean, you have a great market in India. I mean, hand over to you.
We will not talk about the Mumbai roads. We'll talk about the tires, though. So good. You work with shale as well. So, shale gas, shale oil boom is something that the markets have been talking about for the last couple of years now, and the kind of output that we've seen coming in and at the kind of prices that it's coming in. What's your experience? What's your sense? How do you see the pricing going ahead?
We've seen this really steep decline recently. The oversupply is there, and it looks like as if it's there to last. It really depends all on OPEC. If they don't move, I think we'll have a long period of oil prices around that level where we are today.
Deepak, how are you looking at the price movement from here? OPEC has been able to take a major lion's share in the global markets. Would they keep up to it?
The shale gas renaissance has changed the world.
It has.
And the new Gulf is United States. And that has huge impact in terms of the supply demand globally. And with this new dynamics, it's imminent that the overall energy cost globally, transportation cost are all likely to be tamped, indirectly affecting the overall more consumption. And at the same time, there's a deflationary pressure I see. But net, I think this is a positive force for multiple countries, except the ones in the Middle East or Venezuela and some of those countries where the cost of production is running about $60 to $70 per barrel. So in Russia, for example, some of those have hardship. But for rest of the countries like China, India, and some of the net importers, this is a bonanza. And I look at it as stars are aligned for India and many other countries where it's a God-given gift for a few years. Enjoy while it lasts.
Ravi, how are you looking at it? How have the lower crude oil prices impacted a company such as yours?
Well, we have base oil, which is made from crude at the lower level, and we have seen that there's a lag time of about a couple of months where the base oil prices also come down, and they have. Some of it has been passed on to the consumer, and we're seeing that in the market. But it is also at the same time beneficial to some extent for the manufacturers and marketeers. So I think it's a balanced approach, unless we find that pricing goes really haywire. The B2B customers generally have a price formula, but in the retail market, you are able to pass on and take the price back. And hopefully, when we see demand conditions improving in economies, as we mentioned, China, India is now the third largest, I think that will be good for the industry, in addition to what we're talking about, the Indian economy benefiting with the lower crude prices. So I think all in all, if the demand-supply situation, as all of us have been talking about, remains, it could be a good 6 months to 8 months of seeing positive for the consumer and for the manufacturers.
Saugata, as India, as many of the Asian countries, has India been able to take benefit of lower crude oil prices?
I would think so, definitely. The fiscal space, the savings that the government is able to use for many other development expenditure, capital spending, investment expenditures, and so on, the way that it has managed on top of this to direct subsidy flows, the savings that it has derived is now being put to use for many capital expenditures. So, I mean, I think one of the questions that we are faced with every day almost, that, I mean, India is one of the best macroeconomic prospects in the world now. Great growth, great fiscal deficits, current account deficits, and so on. So there's still a little bit of a disquiet on the growth that we are seeing, conditions on the ground. I think one of the things is that a large part of this growth will be driven by the government at this point in time. So the way the government procurement contract works, it typically takes about 12 to 18 months to work. And this government essentially started from the ground, starting from about September. So we are about 13 months, 11, 12 months into that cycle. So I have a firm belief that now, within the next 6 to 7 months, you are going to see the effects of some of the road contracts, some of the power transmission contracts, some of the other contracts. So these are going to create a significant bounce in the capex space and the entire value chain, the small and medium enterprises that supply products to these guys. On top of that, the pay commission things, which is the other fiscal space that has been opened up by the low oil prices, the lower subsidies, that's going to push up somewhat. It's not going to be what happened last time in 2008 and 9, but it's still going to push up consumption demand. So I think the confluence of the two is likely to bring Achedin fairly well, fairly soon.
Good. How has your experience been on ease of doing business with India? There have been some reforms that have been pushed in the positive territory, as Sugata was mentioning, and it's been only 13, 15 months that we've really worked with it. Have you seen a change in India in the last couple of years?
I think there has been some change, but I would call it moderate.
Huh.
I mean, here the oil industry is dominated by some of the large national oil majors, and that has not really changed dramatically, and that probably will not change for quite some time. So it is a very sort of specific, special environment that we are working in. I think what is positive is really the growth impact, the support that the government is showing for developing the industry, for developing society. And I think this is benefiting also a company like us.
Ravi, what's your sense? Has it really changed when it comes to the Indian markets there? Do you think it's showing on the industry level, the kind of reforms that are being pushed?
Well, we service 500 customers who are into road construction and infrastructure. We have certainly seen an increase of close to 15 to 20% in consumption, as you were mentioning. So we are already seeing some of the sectors opening up. We hope mining opens up. We hope, obviously, movement of goods goes up. So definitely we see that, the expectations are very high from the government and from the reforms, but certainly seeing some positive movement on the ground, which is good.
Deepak, what's your sense? Have you seen India change? Do you see reforms actually making a bit here? I mean, we're starting the parliament session soon. I mean, do you see more reforms going across?
There is a lot more euphoria and more enthusiasm, and it's still not fully translated into the ground floor realities. If I talk to my customers and I get the pulse from there, they're still into 5-6% growth phase. It's not like the hyper growth phase where China was about a decade ago or 15 years ago. So from that point, I think we still have a way to go in India to really monetize the current situation on the oil and the other market conditions. So I still see there is a translation not fully happened yet.
Gad, what's your sense? I mean, you've spent some monies recently for an acquisition. I mean, clearly you have a business plan in mind. What's your sense on how do you see the businesses growing? Do you see economies really coming out of this? I mean, we know the Fed is going to increase interest rates and that might just go on. So that's one economy definitely on grid. But how about the other parts?
I think all the interest talk is, I think it's very interesting. It's maybe a little bit intellectual. I probably leave that up to you to comment as an expert. But I mean, it really depends a little bit how the governments in China and India will behave in the years moving forward. For the economy as a whole and for society, every percentage point of growth makes a difference. from a pure business perspective, as a specialist sort of provider that we are, as I said, if it's 12 or 10% or 8%, I think there's still so much potential out there to go after. So I'm not too worried about that. I think this is more when you look at the sort of macroeconomic environment where every percentage point really matters.
Mm-hmm. So, Gandhi, I want to come to you on that then. The Fed interest rate hike, I mean, we're all preparing for that. They have prepared the world pretty much. They've been talking about it for the longest time. If it happens in December, how do you see that changing the economics, the commodity prices? Because that is one area that clearly has reacted on this.
So from a commodities perspective, a Fed hike is superb. Because Fed hike, the dollar goes up,
commodities go down.
Yeah? So that's one. I mean, but there will be other adverse implications. I mean, there will be a lot of volatility in capital flows that have come in, the next round of capital that was supposed to have come in, the FPI portfolio capital that was coming in, that will probably be affected. So I think that's something that we are factored in. We need to live with some volatility, presumably for a short time. If the government actually carries through with its reform programs, with its process improvements, with all the other, the detailing of policy, implementation, debottlenecking of stuck projects and so on, I think global investors will see India as a great prospect. I'm not worried about that.
Good. I mean, both of you, of course, have industries. And how have the crude products then behaved with the crude prices at $40? I mean, whether it's naphthalene or whether it's the bitumen or the other base oils?
I think that depends a little bit what kind of arrangements you have with your customers and at what level of the value chain you are positioned. And we are trying to establish a fair relationship, a trustworthy relationship with our customers. So on the way up, we expect that some of the margin squeeze will be sort of compensated for by higher prices. On the way down, I think we need to be prepared to play the game as well and pass on these price reductions in a reasonable way. And I think that's what we're trying to do responsibly.
Ravi, what's your sense when it comes to the margins, really? The refining margins, of course, have been slightly better than the prices itself.
We have seen that we have passed on some of the benefits, but there is some retention of margin, which is there for more the consumer side of the business. B2B is more linked, variable clauses are there. So I think overall, if the prices do remain good and the market holds in terms of pricing, we could see both benefits, where demand goes up, prices are better because revenues are dropping. Another aspect in India is that though crude has dropped and base oil has dropped, the exchange rate has gone a bit adverse if you take the last 6 months. So that has maybe 10% has been compensated by the exchange rate shift in India. So that's where in India we are seeing that the rupee is not getting as strong, even though our payments and other balances are pretty good. So that's partly offsetting the drop in price.
Deepak, where do you see growth coming in for Asia?
The biggest factor that's going for India and Asia is the population. And population is the ultimate driver. They drive the consumption. And as God rightfully said, we have to be in this part of the geography. And it's chaotic, but there's a pattern in the chaos. And those who can figure out how to play the game, they are the winners.
Gert, you've been going around, I'm sure, meeting your clients. As you said, US, China, and India are your major areas here. Where do you see, if you had to go out and spend, where do you see more growth perhaps being expected, estimated?
If you look at the development of society, probably India at the moment has the largest potential. And also simply because of size. Percentage-wise, I think probably some of the Southeast Asian countries will grow faster. This country like Myanmar, for example, probably will have a huge development, but potentially it is so small compared to India that it really does not really make the difference. So I think from the sheer size, India probably is the growth country for the coming 3 to 5 years.
Okay, on that very positive note, Arjun, thank you. All yours back now.
Thank you very much, ladies and gentlemen. Manisha, it was really stimulating, intellectually stimulating. I hope it's given you some food for thought. And thank you once again very, very much for your presence this evening.